strategy works, right? A lot of people recently have been pushing psychology. Don't get me wrong, psychology is super important, but it doesn't matter how disciplined you are if your strategy truly isn't good for you or just doesn't work anymore, right? You gotta be honest. Sometimes strategies only work at certain times, and maybe this isn't one of those times, right? And maybe that's why you're looking for a new strategy, or maybe you're having a losing streak, and you're like, well, I don't believe in my strategy no more, and then you want to look for a new one. All right, cool, but don't just go full head go into your new strategy. You got to actually know how it works and how it tailors for you. You can't take someone else's word. This is a zero sum game. If you make money, that means someone else lost that money. That's why a lot of people, can't trade because they're losing money. Well, that's because better traders are taking their money, right? So that's why you start off very small, right? So that's what I'm talking about when you take your demo trades. You gotta find, I'd say usually 30, right? But when you take those demo trades or those very $10, $20 risk trades, you gotta make sure that they completely fit your rules. It can't be, it sort of looks like my pattern, it doesn't look like, it kind of resembles my pattern. I think I would take this pattern. No, it has to literally follow your rules. Every single one. Because if it doesn't, then it's going to form bad habits and say you're like, hey, this strategy works. But now you're taking random trades. In the long run, you will lose. You could have a good month. You could have a good 6 months. But say in the next 5 years, I guarantee if you're randomly taking trades, you are going to lose money. That's just how the market works. Right? So I usually say 30. Right? It's going to take some time. Especially if it's a long it's a bigger time frame chart. It doesn't happen that often. But look, the market's always gonna be here, and if you want to make sure you are your absolute best, then you have to take those 30. I usually say 30. Some people say more, but 30 is a good number where you're like, all right, let me find out the win rate, let me find out the risk reward, right? And then you analyze it. You see how the strategy works and if it's right for you. So I'll tell you some things to take into account when you take those demo trades. Don't randomly enter and exit, right? You can't just, at the open, there's no strategy, but you're like, I think this is gonna go out buying, right? Even if you made money, does not matter because you didn't follow your setup, and it's gonna throw off your data. Say you randomly enter a trade and you made $100, and you add that to your strategy, and you keep doing that, and you're like, hey, my strategy is a 50% win rate. But it really wasn't because you didn't follow your strategy. So you truly don't even know what your strategy's win rate is, right? Especially in the beginning, right? Have your rules somewhere nearby when you're taking that trade. Make sure it looks exactly how you want it to look. And you gotta go through the list before taking the trade. And it's gonna slow you down. But it's like anything. You're gonna slow down, but you're eventually gonna go faster. And then you don't even have to think about it. You just look at the chart and you're like, "That's my strategy. I'm gonna take this." Right? And then you also gotta know what time frame it's better, and if it's in the morning, in the middle, like reversals, or at close. See, this is important. This is the most important chart you'll ever see, right? Because trading is just numbers. So it's all about risk, reward, win rate. I have break even. So this means that this is your win rate. That's what your win rate has to be if you want to not lose money. So anything higher than a win rate, you're making money, right? So see, the more you reward, if you risk more, look, 98. You have to be if you're right 100%, you only made 2%, right? 1 to 1. A lot of noobs do that, right? 50%. Are they gonna be right 50% of the time? I don't think so. So this is what I usually aim for, and I'll explain that at the end. Why I usually aim for 2 to 1 or 3 to 1. 33%. You could be right 50% of the time and make money. So Also, you also got to be realistic, right? You could be like, oh, look, 10%. I could be wrong 1 out of 10 trades, and I'll still make money if I do 1 to 10. Well, it depends. Yes, you could make money if you did that. But does your strategy truly give you 1 to 10 when you take them? Most strategies don't. Like reversals can, but most strategies don't. Look, you don't always need a high win rate, right? We're trading not for fun, right? If you are, then you're not gonna be doing this in the long run because you could probably lose money. You're doing this to make money because this is a business, right? People put trillions of dollars into algos and all that HFTs because it's business. So it's an investment. So you're gonna tell me that you're just gonna play around and open a shop and just let it be? No, you're gonna analyze every single number that gets in and out of that store. Inventory, all that stuff. You gotta pay your employees. You don't have an employee. You have a strategy. And if you don't follow your strategy, it won't work. Look, there's many companies who operate on a certain, rules. If something doesn't follow those, or someone doesn't follow those rules, guess what happened? You get fired, right? Because then they're losing money, and they still gotta pay you. So that's why it's super important, right, to follow your rules. So, in conclusion, right, all strategies, systems work, right, sometimes, and they fail at other times too. And there's no such thing as 100% win rate. Trust me. And if there is, you're not finding it. So the important thing is that at the end of the day, if you can find a strategy that's perfect for you and it works consistently and you make money, right? And you follow the rules, you won't care what other people tell you. Oh, you're a scalper, or oh, this, you shouldn't do that, you should do it my way. If in the next 5 years, 10 years, 20 years, you're still making money, trust me, you will not care what other people say about their strategy because you know that your strategy is working. And you're not going to tell people, oh, only my strategy works, because you know that other people are making money and they're not following your strategy because it's all numbers. So I guess I'll show you guys now my strategy. It's basically 3-bar, 4-bar play. So what I usually do, what I trade is off the 1 and the 2. Occasionally, if it's super slow, a 5. I usually start scanning at 9. I'm usually done by 10, 30, 11. So the reason why I personally do that is because I don't just trade. I do other businesses. I have a lot of things I got to do, and I'm still in school, so I can't just trade all day. So this strategy is perfect for me. That's why I love it. And so 3-bar play, you got to make sure that I won't really go over the specific rules. Basically, it's a big candle, a small candle. You buy as soon as it breaks this candle. You put your stop here, and then you look for 2 to 1, 2 to 1, 3 to 1, right? The only time I usually get 3 to 1 is if, say, usually the way it works is it does this, it breaks out, and then it'll come back a little bit. Then they go up, a little bit down, then up, and then I keep going. I'll usually aim for 2 to 1 with that. But a lot of time, well, not often, but every once in a while it'll happen where it goes down and it just shoots up tremendously past my 2 to 1. Then it'll consolidate and shoot again, right? Then I'll get my 3 to 1. But that's rare. So usually I stick with 2 to 1, rarely 3 to 1. And the reason why this strategy works for me is because I'm very jittery. I don't like being in a trade for very long. I want to get in and out. I don't want my money sitting there watching P&L go up and down, up and down, up and down. I want to see, get in, hit my target, get out, right? Some people, in the beginning, I tell them to just put a bracket, put a range order, that if it goes below here, you're out. If it goes above your target, get out, and then just walk away, right? Go watch some movie or something. Go outside and If it hits your target, it's great. If it doesn't, that's trading. So this strategy isn't the best strategy. It's not the highest win rate. It's not the best risk reward, but it's perfect for me. And that's what I'm trying to get at. It only needs to be perfect for you. See, a lot of people they want to trade it. HFTs are ruining it. Well, you gotta remember, algos aren't these crazy, technology that are just working as if then do this. If a stock does this, then do that. That's what coding is. And that's what these algos are basing it off. The only reason it works is because if I see a green candle, if I see the small range candle, if it breaks out of this, then get in, put your stop here, get out at 2 to 1, and call it a day. See if the stock hits it. If it doesn't, you're out. But this is where human emotion, because you don't follow your plan. So that's what's basically the most important part about everything, right? I don't really have any charts right now to show you guys, just because I kind of clicked out of my Thinkorswim, but that's the most important part, right? Like I said, all systems work sometimes. All systems fail sometimes. It does not matter as long as you follow your strategy. As long as you follow your strategy, go bar by bar, you'll be alright.